Ministries of Latin America and the Caribbean. The event has simultaneous interpretation available in English and Spanish. Please use the word icon at the bottom of the Zoom menu and choose the language of your preference. Bienvenidos al conversatorio.
The speaker is translating what she just said in English.
Icono de mundo, en la parte inferior del menú de Zoom podrá seleccionar el idioma de su preferencia. Marta Ruiz, Principal Economist Advisor at the ID.
Marta Ruiz, asesora principal, será la moderadora de esta reunión. Señora Ruiz, tiene usted la palabra. Good morning to all of you, and welcome to the second day of our meetings of the Network of Central Banks and Finance Ministers of the IDB. I hope you enjoyed the meetings yesterday.
Miembros de la red, como el público en general.
Network, as well as the public, and in the virtual format. My name is Marta Ruiz-Arranz, and I'm the Economic Advisor of the Vice Presidency of the IDB, and I have the honor today of moderating this meeting, a conversation with the governors of central banks. I would like to welcome our distinguished panel, Mr. Róger Madrigal, President of the Central Bank of Costa Rica, Governor Richard Byles from the Bank of Jamaica, Mrs. Tatiana Rodríguez, President of the Board of Policy and Monetary Regulation of Ecuador, and Mr. José Cantero, President of the Bank of Paraguay. Welcome to all of you, and thank you so much for accepting our invitation and finding time to be with us today. Today's session will be with first hearing the thoughts of the four panelists about the perspectives of the outlook of the monetary policy and the inflationary challenges in the region. Each presentation will be approximately 10 minutes, and then that would be followed by a question and answer session. So with no further delay, I would like to invite Mr. Róger Madrigal to tell us of his experience in Costa Rica, and thank you.
All I want to say thank you for inviting us to this event. For the Central Bank, always is a pleasure to be here. And now, for the benefit of the majority of the audience, let me switch to Spanish. Macroeconomic facts of Costa Rica. ¿Qué podemos decir de?
What can we say about Costa Rica at this time and its economic growth? The growth rate tends to what we call level out or normalize. We had a year, 2020, of negative growth, minus 4.3, and strong rebound with strong recovery of 7.8 in 2021. And this year, we are waiting for the economy to grow about 4%. Yesterday, in fact, we received the last monthly indicator, and that was August 3.7. But that was the interannual. We had a first semester of growth of almost 6%. In terms of unemployment, we are at levels below pre-pandemic. However, it's still quite high. It's 11.8. It's over 10%, and the participation rate remains low. It's stopped. It's less, and it's stopped there in the last few months. The economy, for those who are familiar with the Costa Rican economy, there's a type of duality. Part is linked to the international trade. We're a small, open economy. And what we call the free zones and special trade systems, and then you have the rest of the economy. The one linked to foreign trade grows at about 2-digit rates. International trade is very dynamic, while the internal, the domestic, is slow. It's growing at around 2.2, something like that, in terms of interannual rates. On average, as we said, we expect a growth of about 4%, which is a good growth rate for this year under the circumstances. We had a problem with the fiscal figures. There was hacking in Costa Rica of the informatic systems of Costa Rica, and we made an enormous effort to recover all the information that was hacked. And from what we know currently, by July, the fiscal performance is greater than expected. Costa Rica has an agreement with the fund, and it's above the goals, the fiscal goals with the fund up to the month of July. As I said, what we expect in very general terms is a growth of about 4% with a strong deterioration in the trade terms of trade, contrary to many of the countries that are present, Mexico and other Central American countries. The increases in the price of raw materials hurt us, and that's why we have that deterioration in the terms of trade, which is also considered a type of inflation. It's an economy that continues to be attractive for what's called direct investment. I think in the balance of payments, they called it direct foreign investment, but my friends tell me that now it's just direct investment. It continues to be with the direct investment liabilities, which attracts foreign capital of about 5.1% vis-a-vis the GDP. We had a problem with the exchange rate. We had an increase in the exchange rate, which was above 10%. It's changed, it's reverted now, and the country in the last 2 months has been buying reserves in the exchange market. And we requested a credit from the Reserves Latin American Fund for about 100 million, and the reserves level has gone back up, which is above now what traditionally Costa Rica considers appropriate, which is a value of about minimum 11%. And right now, I think it's 8 point. As I said, the fiscal figures have a better performance than was previously agreed. In regard to inflation, maybe it's a bit too early to say it, but we seem to have good news. We believe that the peak, the maximum spike was in August, and by September, we had a negative inflation of 0.95. It reverted interannually with an inflation that was 12.1 and is now 10.4. And according to the indications and the forecasts of the friends in the bank, we expect negative in October of about 0.6. The observed inflation, we hope, will continue to drop. The goal is that by the end of 2024, we'll be very close to the target level, which is 3%. We see a moderation of the expectations. They're still high, but it's moderating, it's normalizing. In September, we follow it every day. And right now, with what we got yesterday, it was 7.5%. So with the underlying inflation dropping, it's called the underlying inflation or nucleus inflation. In English, they call it core inflation, and it's about 6.5. We need to lower it more. We have another method to obtain the so-called market expectations, which are around 3.9 or 4%. In Costa Rica, as we see, the inflation is of goods, not of services, and it's affected seriously by what's happened with the fuel, basically. And as you can see in this presentation, we show the different categories or sub-aggregations of the CPI. We see that the higher levels are in fuel or gasoline specifically, and food. Some professors in Costa Rica called it the inflation of the poor, which is always greater than the inflation of the rest of the economy. Of the basket of the low-income persons is mainly made up of food and some public transportation. And that's what's gone up. The strongest increases have been, we've had strong increases in general, but the strongest have been there. We have considered the different scenarios with the fan charts, and for the headline inflation as well as for the core inflation. And we notice a peak, which we think was reached at the third quarter of 2022. And now we begin to see a descending slope which will be reaching a little more than 3% by the end of the third quarter of 2024. In general, the policies controlling Costa Rica, we have the fiscal rule, which was approved in 2018, recognizing that it has to be reviewed in several aspects, and as how we evaluate the perimeter of the rule to make it exclusive for the central government. There are entities that don't contribute to the deficit and are within the rule, which creates a series of distortions and mistaken incentives. And as for the IMF, we are exactly the opposite as to what we were last year. About a year ago, we had doubts of whether we were achieving what was expected, and now we're going beyond the expectations. 12 months later, the fiscal rule or goal targets are achieved with slack, and we're okay, we're over performance. That's how the fund wanted it to be, because in a technical visit, we were telling them that the inflation forecast was not what they expected, that the model showed something different, but they left the inflation at 3% for a long period of time. They didn't want to see our forecast, and that led to our being with a slight shift, but that's not a serious problem because we've done the consultation clause. And the debate in Costa Rica now is how to do with the monetary policy. There's not much time left, but if there's time during the discussions, we can talk about it. The adjustments in the monetary policy rate is prospective based on data, and we've made adjustments of around 775 base points from December 15th to date. There's a strong debate in Costa Rica as to whether that's enough or whether we still require more. And we'll see what will happen with the expectations. That policy was complemented with an increase in the there was an expansive growth, and I would say that it's very expansive. And it's necessary since 2019, where we translated the minimum legal reserves. And for the national currency, it dropped from 15 to 12, and now we're going to put it at 15%. And that has helped recover the liquidity. And people speak of opening up the liquidity, and that's what we've done in recent months, supported by the increase in the monetary policy rate and the open market. Basically, that is the situation of the monetary policy in Costa Rica at this time. I know I have lots more to say, but I'm going to stop here for reasons of time, and with pleasure, I'll respond to any questions if I can. And I'll make every effort to respond. Thank you. Thank you very much, President Madrigal. We'll continue with our questions after.
Governor of the Bank of Jamaica for his remarks. Thank you.
Thank you, Madam Moderator. Ladies and gentlemen, good morning. Thanks to the IDB for inviting us to be at this seminar. Like the rest of the world, Jamaica faced quite a challenge with the coronavirus and again with the Ukraine-Russia conflict. In 2020, we contracted in the economy by nearly 10%, 9.9 to be exact. But fortunately, we are recovering and quite strongly. We did 4.6% in 2021, and we're headed to about 4% in 2022. On the inflation side, however, just prior to the pandemic, we were running about 3.9%, which is just below our corridor of 4 to 6%. So we're quite happy with that. But in 2021, we saw inflation starting to rise in a sustained manner. And actually in August, we gave a warning that we were going to begin raising interest rates. So we made a public statement to everyone that Bank of Jamaica was going to start increasing policy rates. So in October, we did it. We moved from 0.5%, which is a very, very accommodative level of policy rate, because we were trying to encourage growth. And in October, we started to move. Since then, we have moved the rate by 600 basis points. So we now are at 6.5%. And in October, we began our three-pronged approach to inflation. Firstly, of course, is to raise the rates, which, as I said, we did by 600 basis points. We really needed to stay ahead of inflation expectations, and so we had to move early and to move fast. Secondly, we felt that raising interest rates so strongly would encourage savings, discourage spending, discourage borrowing, as well as make Jamaican dollar assets more attractive vis-a-vis US dollar assets. And recall, for Jamaica, which is a very small, very open economy with a free floating exchange rate, the business of capital outflows is vitally important to us. So the policy rate of 6.5% is really a safeguard to try to keep capital in the country. We back this up by strong open market operations. So the bank has been in the market mopping up liquidity on a regular basis with our 30-day instruments. And right now, liquidity is pretty tight, and that gives support to all of our policies. Because the inflation is mostly a supply-driven one, what's important to us in Jamaica is the exchange rate. So oil, wheat, soya, fertilizer, all those prices are going up. But if our exchange rate is also depreciating, it simply adds fuel to the fire. And so we took very seriously the business of trying to keep the exchange rate as stable as possible within the context of freely floating market. So that our interventions have stepped up. We are quite often in the market, and strongly so, trying to keep the rate from being too volatile. And by and large, we have been successful in doing so. It was a pretty tough decision for us to raise rates by so much, 600 basis points, and we may not be done. We meet again in a couple of weeks' time. We may have to raise again. It's tough because it works in contradiction to all the efforts to get growth back into the economy. So we understand that, and the public perceives it as something negative. And so we have had to communicate quite strongly with the public, and in particular with private sector sections who are quite vociferous in their opposition to rising interest rates. But it's good for the country. It's what's needed to get us back to low inflation. And that's the kind of sacrifice that the country has had to make. I must say the Ministry of Finance has been quite on side in the sense that their fiscal policy has been very supportive of what we are trying to do. The fiscal policy is very tight. They run a fiscal surplus. They're committed to getting debt to GDP to 60% by 27-28. They have, although given some kind of sympathetic assistance to the poor in the country, that assistance has been temporary and it has been targeted. So they haven't interfered with market prices. What they have done is give them temporary subsidies, a lot of which have run out in September, and they have done it in a targeted way to make sure that they segments of the population that need it the most actually receive it, and the rest of the population that can do without it don't benefit from it. We're facing a couple of challenges. It's not been all smooth sailing for us in implementing our monetary policy. I would say that our monetary policy hasn't been as effective through the credit channel as we would like it to be. So the banks have not raised their lending rates significantly. And what that means is that borrowing from the banks still is fairly attractive, and the banks are still disposed to lending. What has caused this transmission system to be not as good as it should be? Well, a couple of things. One, of course, is dollarization. We have a fairly dollarized economy. Over 43% of our deposits are in dollars, so that our policy rates have no effect on that side of the deposits or on the lending. Secondly, we have limited competition for deposits. We have a couple of dominant banks, and then the rest of them are small, and so the competition for deposits is not strong. And you find that the big banks can control and keep down deposit rates and keep down lending rates also. And there's uneven liquidity within the system, again, concentrated more in the larger banks and less so in the smaller banks. So that is a matter that we have to address in the future. How to make that transmission system to credit be more effective. And even as we speak, we are working on that. Secondly, I would say that the recent fall in bond prices consequent on the Fed raising their rates has been quite traumatic for many of our financial institutions that hold sovereign bonds. And so they went through a pretty rough period, especially in June, July. The bond prices have come back up a bit and trade pretty strongly now. So because of all of that, the financial institutions have avoided any kind of crisis. And along with pretty strong capitalization, they now are in a fairly strong position. Thirdly, I would say we have to keep a very close eye on the Fed. We know that we have to have a spread between the Fed rate and our policy rate in order to make sure no capital outflows of any significance occurs. So as the Fed makes their announcements going down the rest of the year and into the early part of next year, we will have to watch that very closely and make sure that we match it. To just conclude, I think that we hope, end the year closer to 9% inflation. We are 10.2 now, so somewhere between 9 and 10, hopefully closer to the 9 and 10. Going to single digits by Q1 of next year and return to 4 to 6% by about Q4 of next year. Thank you very much.
Thank you. It's very interesting, the case of Jamaica as well. Now,
We now want to give the floor to Tatiana Rodríguez, who is president of the Policy Board. Thank you. First of all, I wanted to thank the International Development Bank for the invitation to this event representing Ecuador. It is a pleasure to be here to share with the colleagues from the region information about something that is important for our countries. And I have a sore throat. So the economic situation in my country In January of 2000, the government in power decided to dollarize Ecuador's economy. And that meant that at that time, they took the US dollar as its legal tender in the country. Now, what did this produce? The sucre that had been our currency since 1984 disappeared, and only the dollar circulated. With that decision, the state of Ecuador lost all possibilities of doing exchange policy in the countries because the sucre was taken out of circulation. So by not having legal tender or legal currency, we have no exchange policy. And for Ecuador, for 22 years of our dollarization, that is perhaps the most drastic measure that has ever been taken, but it has also benefited us financially, economically, and this is what has been able to maintain us as a country. So the central bank in Ecuador is very popular, and dollarization is what everyone knows has allowed us to maintain our operations stable. And this has a lot to do with inflation. We, as a country, don't have many monetary policy instruments. The policy rate that is something that most central banks have is something we don't have because we don't have the local currency. So I'm going to show you the figures on what we have, but the three rates that we use have been the reserves. The reserves, you all know, is a percentage of the deposits that we receive and from financial institutions, and this is what the central bank has. So we have minimum liquidity requirements. Those are investment deposits, and that is something that banks have to make, and also the domestic liquidity ratio. That is something that is not part of international doctrine, but it's something that is followed in Ecuador. It's an instrument that for all of these years has been managed. I'm sorry, I lost her sound. I'm sorry, we lost the sound from the room. Is not due to previous policy. Since we don't have monetary instrument tools, we cannot decide on or have an impact on raising or lowering prices. So we cannot apply discretionary policies on the part of the Central Bank of Ecuador. So let me share with you some of the numbers that we have on Ecuador. Here, this is related to growth, and I'm going to present this now. In the second quarter of 2022, Ecuador's economy grew by 1.7%. The interannual growth responds to household consumption, fixed capital expenditure, and the government expenditure. Also, the growth of Ecuador's economy for 2022 should be 2.7, and in that way we would be back above pre-pandemic levels by 2023. Here you can see household expenditures, exports, and also the formation of gross fixed capital. ECLAC and other multilaterals project growth between 2.7% and on up. The annual inflation rate, I'm sorry, we lost her sound again.
Inflación.
Ecuador had an annual inflation of 4.12%, explained by food, beverages, and transport. As I had said, since Ecuador does not have, I'm sorry, I lost her sound again, monetary policy instruments, inflation is due to external circumstances. For example, we had a carryover of problems from the pandemic, and in addition to that, this went up with the Ukraine war, and that meant an increase in input prices, especially in the food sector, because there was an increase in fertilizer prices. And that meant that there was an increase in the price of some foods.
Lo que el Ecuador ha utilizado más, sobre todo son instrumentos de
And that affects fiscal policy. What did Ecuador do in terms of this inflation? In the first quarter, we had an increase in the transportation sector. That is because fuel prices going up internationally. And we had a few days that were quite sobering in Ecuador. For 18 days, things were paralyzed, and that produced a lot of problems in the economy. So Ecuador is still trying to overcome that 18-day paralyzation. All production came to a halt. People were not able to go to work. The products that we were trying to export were destroyed. They stopped trucks on the roads, and they were taking products off the trucks. That produced a shortage of many types of products, local products too, and that led to an increase in inflation. And as I had said, we have the second lowest inflation rate in Latin America. We apply the policies put into place by decree by the president. We froze the fuel prices that had gone up in the first quarter. And as a result of that, transportation prices have held steady. And since I am short on time, I will move ahead. Since we're a dollarized economy, the main function of the central bank is to provide circulating currency to society. Now, this is an important challenge because of the current international crises. The dollar is a safe haven currency. And by being a dollarized country, that has been good for us. So as a central bank, we have begun a project of electronic payments, doing payment in real time at a low cost, quick payment systems. And it is the Inter-American Development Bank that supported us with this project. This is a project that we are implementing and we're well underway. It is a challenge because being a dollarized economy, and we require, and we have 18% of GDP in currency, in cash, in circulation. So the main project that we have now with the central bank is to look at that, electronic means of payment. And there we have the support, and we greatly appreciate the support of the Inter-American Development Bank. And with that, I conclude my first presentation. Thank you. Thank you very much, Ms. Rodríguez. Now I call on Mr. José Cantero, who is president of the Central Bank of Paraguay. Thank you. Thank you, Marta. I'm very excited, very happy to be here at the IDB. I greet Dr. Benigno Lopez, who is Vice President of Knowledge, Mr. Parrado, who recently made a presentation in Paraguay on monetary policy. He was right on target. I'm not going to contradict anything he said. And in times of uncertainty and crises, I think the questions are more important than answers. And sometimes a question can be a managerial tool, it can be a strategy element. And the question that has been with me during the last 3 years is, how can we navigate this crisis? How do we find our way through this decade? And that is a question that is valid for a person, for a family, for a company, for an organization, and also applies to monetary policy. And perhaps it may not be an answer, but it is something that we have learned from the central bank. And the answer comes from philosophy. One of the cardinal virtues is patience. And Aristotle says that being bold is one extreme and being meek is the other. So we don't want our policies to be extreme just to overcome a situation that is extreme. And we don't want the country to wither and die because of a lack of action. Now, bravery is somewhere in the middle, and that means being brave, but at the same time being prudent, using reason and being acquainted with your own capacities, your own abilities, and based on that, make wise decisions. Now, I think that in all countries, central banks have been, and this is merely normal in a situation of crisis, it's normal for central banks. Central banks may be hiring helicopters and throwing money out of the helicopters or using quantitative measures. But in the different phases of this crisis, and these are all different scenarios, but basically this is part of the same crisis. The pressure has always been the same. And the central banks have taken decisive action. They have been consistent. They have been coordinated. In the first phase, it was a central bank. We were the central bank that lowered its interest rate the most, and we maintained that level for 11 months, and we refinanced all of the economic sector, SMEs, micro enterprises, all of the economic enterprises were refinanced. So I think that that was a big dose of prudence. But since Paraguay has a track record where we have always been prudent, that prudence has helped us in our decision making. So this question about how we deal with this decade, and already for 2 years we have taken the first steps, but we realize that the decade is not going to be an easy one. And I think that the second answer, at least for me, comes from history. So if we review the history of my country, Paraguay, and our economic history isn't much different from that of the other countries in the region. And I think that the 80s crisis may serve as an example. Back in the 80s, there were lessons that we can draw. And I think that countries didn't make the structural reforms, but we entered that period with a fixed exchange rate. We used up all of our reserves. We financed deficits. So our monetary policy was not prudent. We financed the deficit of treasury, of SOEs. We didn't strengthen our central bank. We did not take rapid action in terms of monetary policy. And we didn't look at our macroprudential policies. We didn't strengthen our banking superintendency. So all of this led the Central Bank of Paraguay to engage in actions beyond monetary policy. This year, the central bank launched an instantaneous payment system, and that is a 24/7 payment system. This system has been in place now for several years. It represents more than 200% of GDP in terms of the transactions. And now people are going to be able to be part of this financial circuit. So we learned that shocks are very hard on countries that aren't formalized and for societies that aren't competitive. So that is why this payment system is part of a solution, but also with that idea in mind, we took a bill on financial inclusion to Congress. And the idea is to accelerate bankerization, to accelerate this whole process. And right now, we have an agreement with the IMF, and that is thanks to a lot of work done on coordination. That's important in the area of fiscal policy. So an agreement with the IMF without financing that
aims at technical assistance so as to put together all of the structural reforms that will enable the country to be more competitive and provide better services and be more efficient. At the same time, we're working hard on creating databases, information, web services for the financial system so that that system can make better decisions and so that society in general can use this data. So that is something that we have to continue to work on. Risk-based supervision on the part of the central bank is being strengthened, and our resolutions are aiming at strengthening the buffers in our banking system. We're also fine-tuning our stress test models. We are meeting periodically with the financial sector to learn more about their operation. We engage in a dialogue with our society so as to have an understanding going beyond data, so as to better understand the economy, just like we're gaining a lot of information from this meeting. So the idea is to see our economy from different vantage points. And an important part here is ongoing control over the buffers. We have 9.3 million in reserves, and that is a level above what we had in the pandemic. Also, we are doing something similar to what Jamaica is doing. We don't want to have too strong of a presence in the exchange market, but we also know that we have to seek stability in terms of the volatility that creates noise in the short term. We are constantly looking at the buffers in the banking system, and there too, we see good data. Inflation in Paraguay now is converging. We went up to 11.8 in April, and since then, it has been coming down. It plateaued for 3 months, and between August and September, it dropped further. Now, this is consistent with our projections of 8.8% by year end, and just like Costa Rica, coming down to 4% next year, and that is in keeping with our target and is in line with expectations. Paraguay never had hyperinflation. The expectations, and thanks to that, medium-term expectations are anchored. That gives us a possibility of making sure that our policy rate, that is something that we raised over the last 13 months, we view this now from another angle because inflation is coming down and the inflationary expectations are in the medium term also turning around and is approaching target. And since there are forces and expectations that are adaptive, and if this proceeds in this way, if inflation continues to come down, the inflationary expectations will also correct more quickly in view of this scenario. I conclude with a quotation from Marcus Aurelius. And we have to remember this. He says that impediment to action makes action possible. What stands in the way turns into the way. The shock on the way becomes the way. So the shock that we're facing today is what we're going to have. And the way ahead in view of these shocks are structural reforms. It is the ability of the central bank to become part of structural reforms by doing digitalization, by strengthening the institution, and especially by engaging in dialogue and thus gain a better interpretation, making decisions so as to navigate this ocean and find our ways through this decade that seems to be a difficult one. Thank you. Thank you very much for your thoughts and your information on Paraguay. And thank you on your thoughts about how to deal with the upcoming decade. Now I open the floor for our discussion. I would like to begin by asking a general question. First, to President Madrigal. I know he wants to tell us a bit more about monetary policy. In many countries, we see that despite the aggressive raising of rates in some countries, inflation continues to be very high. So I would like to ask, what domestic or external factors do you think are constraining the transmission of monetary policy to prices in your country? And how are you reacting to keep expectations anchored? That's something that was just referred to by President Cantero. So if you agree, we can begin with you, President Madrigal. Well, first of all, I would say that you have to get your diagnosis right about inflation. There is a lot of agreement in that in most countries, and here this is globally true, but it is true in the case in Costa Rica, the shock is an external one. The increase in commodity prices, fuel, steel, fertilizers, etc., is something that is passed through directly. Now, in parallel to that, there was an exchange shock that reinforced the trend. So as someone already said, inflation initially, and what Friedman said, doesn't come from a monetary shock. So much so that we had low inflation, almost negative inflation, or at zero, between 2019 and 2020. What happens is that in December of last year, the bank identified inflationary pressures. And what Costa Rica did, and this is something not well known, is most Latin American countries have examples of hyperinflation, and Costa Rica has no such examples. Our highest inflation in 81 was a bit above 100% historically, but Costa Rica maintained the second highest inflation for a long time. The world had solved its inflationary problem, but Costa Rica had the two-digit inflation. Nicaragua, Bolivia, Ecuador, Argentina, etc., were in first place with inflation, hyperinflation, but Costa Rica came in with two digits, whereas the average world was somewhere between 2% and 3%. So there is hysteresis in Costa Rica in terms of inflation. And the idea having a monetary policy rate is that once the shock is over, both shocks, that would be commodity shock and exchange shock, if we're able to control it endogenously. It's not that the bank wants to control it by manipulating the market. I'm sorry, I lost his sound.
Una tasa de política es para
A policy rate is basically to control expectations. The removing liquidity surpluses and monetary policy is precisely to avoid entrenchment of high inflationary expectations above 3% in the medium term. So that is the whole purpose of the policy. I don't know if that answers your question. Yes, that was perfect. I don't know if anyone wants to add anything to that answer. If not, I would ask something related to monetary policy in advanced economies. We're seeing the Fed move rates aggressively, and that is affecting financial conditions internationally. The emerging countries, including North America, are very vulnerable to exiting capitals, depreciation of currency, increase in borrowing costs. But I would like to ask you, what would you say about financing conditions in your countries, and how are you assuring financial stability in your countries? What mechanisms are you using? How are you doing this? So, Governor Byles.
Contain the interest rate differential with the United States in order to keep the currency from depreciating and capital outflows. Can you elaborate a little bit more on that, and how do you see the conditions within the next year as the Fed continues to raise interest rates? Thank you.
Yes, as I mentioned before, for a small economy like Jamaica, we have to be really, really vigilant about capital flows. And so watching the Fed and their rate, our rate, and the difference in inflation. So the Fed is about 8.2% US inflation, and we're about 10.2. So there's a 2% difference there. So we try to at least maintain a 2% difference in our policy rate with the Fed. So that's really important to us because our reserves, whilst they're adequate, can be easily depleted. And we already have a very high level of dollarization. So when it comes on to the rest of the financial sector, we oversight them very carefully. We get regular reports from them. We run tests to make sure that from a capital point of view, they are strong, that their non-performing loans are well within the range of what is acceptable. So we keep a very keen eye also on that. So we're watching both things at the same time, and it's a delicate balance, but there's no alternative to doing that.
Very much, Governor Byles. President
Yes, I agree with what Governor Byles just said. Our economies, too, are also dollarized. And I think that the countries in the region move quickly. We made adjustments in the case of Paraguay. This is something we did 13 months ago. And we knew that the Fed was going to make these increases. And obviously, there's greater credibility in monetary policy in the United States, and that leads to these lags. Throughout time, we have also made decisions that have been on target. The buffers that we maintain are high, but we continue to do macroprudential measures along this process. And we also call for adequate capitalization, liquidity in the banking system. And we do stress testing. And what the governor just said is basically what we're doing in Paraguay. We do periodical reviews. We try to be surveying almost continuously. And we have to understand that when there are severe shocks in dollarized economies, shocks that were more difficult than what we had foreseen, thinking of the crisis of the 90s, we see that we are not so much part of the global economy, and a lot was in guaranis or in dollars, and that left the country. This is different from capital flight, and that is thanks to the fact that there is trust in the country and the fact that we're not as globalized as other economies are. Even when the pandemic hit, we saw that emerging countries, our neighbors, were not able to lower their interest rate as we did. We had the same 4% rate, and we brought it down to 0.75. And they went from 4 down to 2 because capitals fled their countries. That was not the case in Paraguay. And I think that we have to look at Latin America and understand the differences. Thank you. I agree. Now, in view of time, one final question for President Rodríguez, having to do with coordination of monetary and fiscal policy. In the case of Ecuador, that is especially important because of the limitations of monetary policy. We saw that there was good coordination during the management of the pandemic. And yesterday, when we heard about the wheel, we heard about the importance of making sure both policies coincide. So my question is, what are you doing in Ecuador? How are you coordinating? And in your case, and what recommendations would you have for other countries?
Thank you very much for that question. In Ecuador, it's like it is in other countries. We have to coordinate between the Ministry of Finance and monetary regulators. Last year, there was a legal reform and we enacted the law in defense of dollarization, and it included establishing a separate monetary board, which is independent. And that is important for us as a country. This gave the central bank the autonomy it lost over the past 15 years, which is important. The government is prohibited from using central bank resources, which for us was a major step forward because the Central Bank of Ecuador is no longer the instrument of last resort. It can no longer lend to the government, nor can the government borrow from the central bank. Now international reserves are at $8 billion and have remained constant. So this is the record figure we've had in 20 years, which for us means that we are regaining confidence in the financial system. So that fiscal and monetary coordination means that we are represented on the board. The Ministry of Treasury is at the table with voice, not a vote, because we believe that all stakeholders must coordinate. This has worked well, and we've been able to move forward with important projects for the country. When we discuss things like this, it's clear that we have a viewpoint which is very different from that of people in the street. What happens in our country is, as it is in other countries, they don't care that we have the second lowest inflation level in the region. If that is a hardship for them, it doesn't help to tell them that some other country is worse off. Doesn't help. So we need to have the right fiscal and monetary policies to control inflation so that people can have access to the basic resources they need. So coordination in our country, fortunately, is working well. Everyone is at the table and we're always trying to work out what is best for the country. Thank you very much. And that ends this session. I thank all panelists for their time and for being here with us today. And I invite the members of the network and the audience to stay with us for the other sessions scheduled for today. Thank you for your attention and have a very good day.